Hey everybody, good morning, ladies and gentlemen. Welcome to the show. How's it going? And welcome to the show. See, I should flip this over to the right charts. Bitcoin. You can't see it behind me, but Bitcoin hit 110,000 last night. The USD finally making the moves. But this is scary, right? Because we're breaking out in free air. The resistance is very firmly right here. This was a roadmap pattern pullback, roadmap line extension. That's the target. That is the target. Then that would be the expectation. Now it is possible that we just pull back to here and then pop the next fib line. And then pull back to here and pop the next fib line. Bitcoin's no different than all the other price action. All right. It's no different at all. So don't get, I mean, maybe Bitcoin and Forex, gold, maybe they're the purest form of some of the stuff. So I was kind of expecting a pullback from here if we didn't get it so far. I mentioned that we could go up to that 115,000 area, and then it's going to be a more violent potential. So that's where we're sitting. You know, there was the distinct possibility that we just consolidated and popped again. That's exactly what we're doing. Now, as far as how high, it's fairly simple. There's your leg. There's your leg. We're right near the top of where we might consolidate again. And we could pop that 1448. Always something, right? Always something. Can't just clear and easy. Is this the correction starting on S&P 500? Certainly looks like it. Certainly looks like it. Check this out. Dun, 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 dun. We have broken down below the 30 minutes, below the 1 hour. And guess where the next next support is? And this is a potential 1, 2, 3, 4, 5 down. Maybe 5 down. Maybe let's dive into it and break this down just a little bit. Maybe this is a 1, 2. This is where it gets a little bit muddy here. Does the 3? So obviously, this is a 1, 2, 3, 4, 5. But that's in the middle of potential 1, 2. That would be a 3. We get a 4, and then we get a 5. And then we'll probably get a bigger retrace. So this is the crux of what you might say is the crux of the matter. It's like, is this a 4? If it is a 4, we could see this probably a 4 overnight. A 5, that was probably a 1, 2. That was probably a 1, 2. 1, 2, 3, 4, 5, 4. So 4 could potentially take us all day, maybe even into tomorrow before we get the 5. And 5 could happen overnight, or, of course, since this one was fast, this one's probably not going to be fast if this is what we're developing. If you're watching right now and you have no idea what I'm talking about, Elliott wave theory. It's a theory of how the market moves. It's how I make all these epic predictions. All right, this is high probability when it sets up and when it's doing clear things, this is a little bit muddy. When it's clear, it gets it pretty dang bang on. So looking at this move right here, that wave 1, this wave 5 came up a little bit shy of what I would have expected to see. But there again, like I said, doesn't always come out perfect. I'm expecting, we're back to the danger zone and rejected back out pretty quickly. Probably see that, do that, and then back down in here. After we do that, where might we find support on that fifth wave down? Let's see. One down off of the 4. So if this completes a 5 down in the next day or so, I'm going to say somewhere in this vicinity right here would be where I expect this fifth wave to bottom. And then once we do that, could go fast, remember. Let's just go with the, let's go right kind of in the middle there. Deleted the wrong thing. Let's go with 57.80. So then we are likely to see a pop back up here. And then this will feel more like a crash if we're going to do that next leg. That's going to set us up. So is this an A, a B, and a C? Or, and that, right now the proportion of that could stop right there. Is that a C or is it a 3? Is this a 1, 2, 3, and we get the 4, 5 down? If we get that, that's that worst case scenario. Remember, so this is very, 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 very important. What happens? I am of the preference that this is an A, this would be a B, and this would be a C. It's possible we stop way up here. It's possible we get way down here. And it's possible that we see this really get spicy down here. That's what we're cooking with right now. It's a healthy start. See if we can finish it up. So this is probably, now how do we know it's not this correction, right? How do we know what to expect when expecting? Right now, we've got the initial drop. Right there. So a break back above that stuff right there from yesterday. Set your alert right at the top of it. We get back above that. All clear for now. Probably going higher. Set your alert right up there. Now, why am I on ES and not the SPX? Guess what? SPX doesn't have any overnight action, right? We've just been sitting here like a lump. So that high yesterday, still the same. So if you want your alert on SPX, right there, coming across. Set your alert right there around 59.40. If we start getting a candle close up above that, starts tipping the odds we're going on higher. That's 100 points above where we are. This drop, man, talk about a spicy move, right? We went from right at 6,000 by the close yesterday, right? We had made 150 point drop off that high. Holy bananas. Volatility. And then this move overnight, even though we've recovered, it went on down. So, kind of expecting some sideways junk, and then a fifth wave. Now this could go fast. It doesn't have to be slow. Once the market opens up, this could speed things up. Just the theory of alternation. Now see, it's bouncing off that 5 minute already. There. It's potential. That's all the 4 we get. That's always the potential. So interesting stuff right there. Now, if you're wondering what the devil this orange line is, you're like, what? I'm brand new, JT. You haven't explained anything. Cool. Welcome. Thanks for coming. Thanks for joining. Glad you're here. Let's talk about it a minute. So this thing I've got right here, I call it the market roadmap line. It tends to be support and resistance. As we look back through here, you can see we have support and resistance, support and resistance. Now, since I don't have a bunch of setups today, there's actually none on my scanner out of 3,600 stocks, or it's a lot of stocks. I search every night. Just I'm bouncing around. Yes, no cohesive thoughts. I am live. So this is my market roadmap on the 1 day chart. All right, each day is 1 candle. I have thousands and thousands and thousands of tickers on here. About 3,600 of them. All right. This back test right here of 3,600 tickers goes all the way back to 1968 up through last year. I have not kept it up to date this year. We've got a few hundred trades, but this period right here covers 56,000 trades. So this is a pretty good chunk of trades. All right. The average for this thing lasts about 45-ish candles. All right, that's trading days. The standard deviation on that is 35 right here. So that means the 99th percentile is 150 candles, roughly. All right, that works on all time frames. Now, back to it. What is this line? It is a set of EMAs. Very simple. Right here. Oh, I was going to show the code. Show the code right here. Right there. Very simple. Just a few lines of code. If you want to know more about that, click on the channel icon underneath me there. Go check it out. That video, I'm like, this is my favorite indicator for free. I give it to you. I explain it, how it works. I'm going to give you a little crash course here. What we're looking for is price action to come up through that roadmap line. Then we're looking for some kind of pullback. So I am a trend. So this would be a trend. I'm a trend pullback. That's a pullback. And then I'm a continuation. That's what I'm looking for. Trend, pullback, continuation. All right. Now, as we look for that in a reliable way, which, this working out 75% of the time is pretty reliable. It's not perfect. Nothing is in the markets. So we have this high. This is our interest. This is the high we're interested in. This is the low we're interested in. Right here, this was the trend. This was the pullback. And here's our continuation. Now, when we cross the 618 right here, you can see my algorithm, which I don't give anybody access to this algorithm. It's mine. It runs a lot of the automated strategies that I have. That algorithm fires off an entry right there when we get above the 618. And what we're looking for is continuation all the way up here in the vicinity of the 1272. Now, through doing a bunch of statistics, I found that 90% of the way to the 1272 is a much higher probability to be hit. And that's why this 1.1448 level shows up on the chart right there. And that's why the algorithm exits at that exit right there. Now, if you have all the things set up here and you take that entry, 75% of the time, no matter the ticker, no matter the time frame, 75% of the time, price will go to that 1448 right there. 75%. Now, but what about the little extra? That went on up higher, right? 70% of the time, it goes on up to the 1272. Now, the crazy thing is, this one rallied on up, hit the 1618. That move right there only happens about 35% of the time. So this one's 75, high probability. This one's 70, still pretty high probability. This one drops down to 35 to just go right up here without cranking back down. That's a big drop in that little gap right there. Big drop. Now, similar to what I was talking about on Bitcoin, you can see this move right here. I wanted to see a healthy pullback in Bitcoin. We haven't really gotten one. This popped up, pulled back nicely, ramped on up. But had we just ramped on up, we pulled back, right? Chopped around, and then we went for the extension. Possible what we see on Bitcoin, all right? When I talk about what I expect to happen, it's just based on looking at this pattern hundreds of times, thousands of times, tens of thousands of times, over and over and over. Now, what's one look like when it fails? Here you go. Do they fail? Yeah, they fail. This one fired off the entry right there and promptly went down to a lower low. Where do we stop out? $1 below the low. Why $1 below the low? I ran a bunch of statistics. If you haven't picked up on this, and $1 below the low was the best that worked across all time frames, all tickers. All right, now there's a caution here. Low price stuff around $10 or under, doesn't always work out the best. And if you do the math on that, you know, $1 below the low is like a 10% on a $10 thing. If the low's at $10 and if the low's at like $4, $1 below the low is like 25%. And, you know, the numbers get all skewed up when you get down there in the low price stuff. So be careful playing low price stuff with this. All right. That's the warning right here. All right. Anybody got any questions on the basics of the pattern? There's one that works. There's one that fails. There's some caveats in here. My algorithms do have some filtering. It looks for certain time frames, certain other caveats in there. And this was a 1 minute chart on the S&P just for the demonstration. Now, maybe like, well, what about bearish moves, right? This works the same way, but my algorithm is not tuned for going bearish. All right. Why? Because the market tends to go up over time and the statistics don't necessarily play out the same way on the downside, but the pattern still works, as you can see. We ripped right down through all the fib targets, even went for a deep extension at a 2618 right there. Why do I use the fib levels I use? Well, you can see how it kind of bounces. You see how this kind of ping pongs on these levels? Right, the 618, rip on through, head on down, rip on through. Crazy, right? And then we get this big pullback, which turns out to be another roadmap line bounce. And that one just shot from the bottom right down to the target in one go. Right there. Had you been watching the futures, you probably would have had a chance, but that one shot right down to the target in one shot. It's kind of crazy how this works, right? I mean, it's a pattern that just works over and over. Now, it's the same on all time frames. It's a fractal in nature type of thing, and it's all based on that stuff I started out talking about, Elliott wave theory. Like, this is just a high probability pattern inside Elliott wave theory. I figured out a way to isolate it. All right. It's kind of my proprietary work. I've been working on this for a number of years to figure out how to isolate a repeatable pattern inside Elliott wave. No other Elliott wave-tician, that's kind of what they call Elliott wave counters. No other Elliott wave-tician I know of has this kind of thing automated in this way to identify these setups. You can see them play out, and then you can see them fail, and it's just part of the nature of the whole thing. My algorithm is bullish. In Termite Trading Lab, a few months back, we did some work and did some statistics and found that even in periods of bearishness, this algorithm tends to outperform without doing the downside. Isn't that crazy? It tends to have more winners and make more profit in periods of bear market than it does just on the average. So that's kind of That's kind of wild too, I think. So people that want to know about why I don't tune it for the bearish side, that's why. Now, there is another pattern that I love to combine with this. That's called the measured bounce. All right. Now, just for the sake of talking about it, let's go down here to a clean chart. Now, we've already talked about how we get these reversals, and we have a trend, and we have a roadmap line, and we get a pullback, right? And that's the roadmap line bounce right there. When we get that move up through the 618, that's where we get our high probability move. Right there, relatively small, but it's very high probability. Now, there's another caveat to this. All right, ignore the roadmap line for a minute. If this pullback is to the 618, like this sets up what I call a measured bounce right here. We use a 3-point tool, go from the low to the high to the low right there. And instead of only going for this low level target right here, instead of only going for that, when you get one of these measured bounces, it now sets up the potential for a bigger extension right up in here. Oop, turned off mine. Right up in here. And if this is a new trend, we usually go for this level up here. So those are much bigger targets than what you see right here. So I love looking for these patterns too. And you see these, I identify a lot of these on the downside because the downside is where a lot of risk is if you're bullish a lot. All right. So I'm always watching for ones that do this and get that 618 right there. And think about it. Think about it. When we're looking for this right here, and we do have the roadmap line in here, right? When we did do a roadmap bounce, let's zoom up on this just a little bit. When we've got the standard and we're looking for that close above the 618, guess what this is when we bounce off the 618? That's the measured bounce to the downside. That's why I'm often looking for the rejection of that 618 level, because this can project it right down there to those targets that I just talked about on the downside. So that's why when these fail, there's the targets. Always $1 below the low. And then there's the downside targets when they fail. Those fail, since we reach this 75% of the time, when we get a close above the 618, when price comes above, it comes up here, 25% of the time we get a failure that comes on down here. All right. Hopefully that cleared up a little bit of the pattern questions, what I'm looking for. Every system, pretty much every system has roots in this some way, somehow. Gold Rush is the only pattern that I go for that's algorithmic, that's a little bit of a derivative of this. It's not just using those patterns, but pretty much every other system I have has its roots in that. And if you're like, well, how do I get my hands on this? The easy way. Links in the description. I sell it for $5. $5. That's how important I feel like it is. I make it as attainable as possible. The publisher wouldn't go any cheaper than $5. They wanted their piece of that for processing and all the whatever. So they mostly make all the money. I make virtually no money selling it for $5. So there you go. All right. That's the two patterns I'm looking for in the market when we go look for this stuff, and it just compounds from there. Like everything I've talked about. So, when I started out talking about price action and where I'm expecting it, it all combines. Like there's the measured bounce right there. See it right here? It was right there. And there's the target right there. It's already drawn. I already have it drawn. Like there's the move up. There's the retrace. There we held. We popped up. We hit that target. That was a big measured bounce. Right there. Potential. Come back down for a 618 retrace now. We moved up. 618 retrace. Sets up the measured bounce to potentially go higher. If we break that, we're potentially going lower. It all combines together for the same sort of stuff. Now, looking at our market gauges here, this is getting kind of crazy. Flip back over here. Switch to the daily. We did that double top. Look at that reaction. I was warning yesterday. We are likely to come right back down to the bottom here. This is stocks above their 20-day moving average on the S&P. We're likely to go back below 20% of the S&P 500 stocks above their 20-day moving average. Just a giant market oscillator. We tend to go up to the top, we tend to go down to the bottom, and we tend to bounce and bounce and bounce. The majority of our time is spent in the middle, but we're usually traveling from the top to the bottom, from the bottom back to the top. We'll just keep doing that over and over and over. S5FI, as I warned about yesterday morning, we poked out the top, and you see what's happening here. Probably going back to the bottom. Some way, somehow, could be a roundabout's way to get there. Probably going back to the bottom. S5TH, just hanging with my homies right in the middle. This may or may not make any big move. If we get a bigger correction in the market, we may come back down in here. Likely that this is heading up here. Long term, could take a couple of years to get there. All right. So before we actually talk any serious trades, opportunities, whatever, I have to remind you that all trading involves a substantial risk of loss in past performance. Just because I predict things doesn't mean I'll get it right in the future. So it's not necessarily indicative of future results. This presentation, though, is intended to be informational, educational, fun, entertaining. Hopefully I entertain. It's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. And if you desire that personal financial advice, hire and consult a financial advisor. That's not me. I'm not telling you what buttons to push. Certainly not telling you what you should do with your own money. I have no idea your personal financial situation. You need to hire and consult somebody that knows that if you're looking for somebody to tell you what buttons to push. All right. I can't tell you how big to trade. I can't tell you how to scale up. I can't. I can tell you what I'm doing, and that's what I do a lot of times. So I share my own experience, and that's why I publish it all on K-Info right here. All-time history right there. 50K challenge. Ooh, had some more trades drop off. Look at that 3-month right there. And just look at the last 30 days. 2.78. We'll probably add some more in here pretty quickly. There's some trades looking really close to closing out. Of course, I may get put a whole full load if this correction continues. And then we'll see what happens. So I've been doing a lot of put selling in this account, but I do have some long positions also. It's part of my 50K challenge. Now, what does that mean? I'm trying to build my own personal account. I'm not trying to teach you how to do it necessarily. Where this number right here consistently is 50K for 1 month of trading. That's the goal. How do I do it? Consistency. And I want it consistent, all right? So just reaching it one time, that's not the goal. I need to reach it for 6 consecutive months. So this one will be 50K. This will be at least 150K. And this one, that's a 1 year, but it'll be at least, do the math, 6 months, 50K, that'll be at least 300,000. And it's probably be closer to 6 or 700,000 by the time I get this for 6 consecutive months right there. If you want to know more about it, I've been posting the open trades each day inside the channel members. So hit the join button on the channel if you want to see that. Or if you want to know every twist and turn, every thought, I post that to my Termite Trading Lab Insider group inside Discord. So you can join that if you want. That's jeffreytrader.com/inquire. If you want to know more, links in the description for that. It does cost a healthy penny to be a part of that group. Now, as you can see, my 1 month total, only 2.78, and my 3 month total, only 3. I've only been doing this for 1 month. When you look at it right here, there's the 3 month right there. Here's the 1 month. Here's the 3 month. You look at the year. There we go. That's where we're at. All time. This is an account I was using back in 2018, 19 into COVID. I left it for dead, refunded it right here when I started the challenge a little over a month ago. And there you go, 100% win rate right there. Like, wait. Yeah, look, over the last month, winning trades, 100%. Not a single loser. Average trade gets about $100. Last 3 months, 100% win rate. About $100. Look at this year, or looking back 12 months, 100% win rate, about $100. Not much difference here, right? Because I just refunded the account. I wasn't using it for jack squat. So there you go. That's how you do it consistently. You know, I have all these systems, and everybody's like, "Well, which one's your favorite?" I was like, "I don't have a favorite." All right, my market roadmap systems, I guess, is the favorite because it's the basis of all the systems. And people in my VIP group were like, "I just want to see how you manage a whole portfolio and build it for consistent profit." So that's why I started this challenge, to show you how to build consistent profit over and over and over, month after month. Why am I going for smaller $100 wins? That's how you do it consistently. All right, that's how you do it without taking any losses. I don't like to lose money. Not a big fan of that. All right, so in this account, it's my most conservative, most highest conviction ideas. That's the only ones I play. Right there. Only thing I do. In that account, I have 20-something accounts. I manage for family. I manage for Kimberly in the chat, my favorite subscriber. I manage for my parents, my mom, my dad. My kids are starting to realize that maybe they should ask me to do some stuff for them. It's kind of funny. And NASDAQ. Potentially going to roll. Same sort of patterns as the ES. Russell. Anybody take advantage of that IWM put spread I talked about a few weeks back? That thing started coming back to life today, or yesterday. Started getting real sparky. If we get ripping on down through here, that thing's going to get real sparky. That was out to September. I think I don't even remember what I have exactly. Maybe I'm 180, 150. Looking for this thing to blast on down. Now, if we get down here, hold support, I'll probably book it out, wait for that, add it back in, and go again. Right there. It's probably what I'll do. So, you wonder how you trade Russell? IWM. CL. Rejected. That was not what I wanted to see. I have to be honest, that was not what I wanted to see right there. That's a 1, 2, 3. Not perfect example of price action. Let's see what we got here. And go up a time frame, up a time frame. There we go. Here's what we're cooking with. That was the first move down. This was the retrace. Even though I went a little higher, now we're looking for, well, it already made a lower low, but we're looking for this to touch that kind of price right there. My friend's My friend Likely was calling Scam Likely. Hey, thanks for being a channel member right there. So right here, that's what we're looking for. There's the next support. If you turn that back off. Scale. So this to me looks like 1, 2, 3, 4, and that'll bring us some slight overlap. If we hold right where we are, that's the best, most ideal situation actually. And then we get a fifth. This could be what we're cooking with right now on oil. If we turn around here, that next move could be right up here. Now this pattern is not one of the two patterns I was talking about. This is more, a little more in-depth nerdy into Elliott wave theory. We've been looking for this to rally right up in this vicinity right here. And then it will probably get another pullback like this before we go on up even higher. Yep. That's what I'm cooking with right now on oil. GC, that might have been the top. Might have been. It might have been here, but I want to see that more definitively hit actually. So we've got this target area up that goes all the way up to that 786. You may be like, wait a minute, this looks a lot like the measured bounce. And you would be right. This move down was an echo down right here. First move, next move, come up. That's that 618. Oh, that whole first move down, 618. That can project it down bigger. I expect it to take place like this. So looking for that. While that's not looking so good, we came up shy of the ideal spots. I expect to go just a little bit higher. This one went higher than a 618. Usually the nature of the move, since this one's a higher degree, this one will also exceed the 618 before we get continuation lower. Right there. Bitcoin keeps pushing higher. Watch out. Watch out, watch out, watch out. Didn't do that pullback. This is a dangerous spot. Now this is the futures. Earlier I was just on the spot market. We have this resistance right up here at about 15,000. If we just go ripping for that, remember 75% likely that we were just going to go, we got the close above right there. 75% likely we were coming up here. I kind of expected to do a dip right back here before we did that. But hey, it's just what I usually see. I mean, when I was going through the S&P, you know, we saw those big swings as we ground up to that 1272 vicinity right up there. And sometimes they just go ripping. It's like we saw on the SPX. A couple of them just went from the low to the target. We get that sometimes. So this one, likely to find some kind of resistance, maybe go as high as 119. And then we'll probably get some kind of reaction. If we pull back and hold the highs, that sets us up to go on the next extension. Next extension. Now these probabilities still the same. 75, 70, 35 without getting a big pullback. Large drop off in probability in this vicinity without getting some sort of bigger pullback. Just keep it in mind if you're super bullish on Bitcoin. Now, super bullish on Bitcoin is not flowing through to altcoins here. You can see the number 2 coin. Still lagging. Bitcoin's up here breaking out, making new highs. Bitcoin's up here. Ethereum's down here, screwing around. That doesn't look too bullish. Be very, very careful here, chasing altcoins. We may not have an altcoin, like, since this rally 4 years ago was super spicy and we got, like, everybody was hyped up on these altcoins. Everybody's convinced that we're going to do that again. We're going to get these awesome altcoin moves. Maybe the move is actually in these Bitcoin holders. And maybe they're the new hype, like CEP right here. MSTR right here. The companies that hold tons of Bitcoin. Right, some of these are miners, but some of them, their strategy is to sell bonds and buy Bitcoin. That's like what MSTR started. CEP's doing. Smelser, wherever they are, right there. Yeah, right there. That's their Smeller Scientific. That's the plan. All right. So maybe those are the new meme stocks, meme coin outperformers. You can see the excitement on this one right here when they announced they were going to do it. And pullback, potentially going to ramp on out right there. MSTR had a lot of excitement over here. Deep pullback, hit everybody pretty hard. Even though Bitcoin's busting out today, this one's still churning right here below that 618 level. Still churning. What might that be? That might be a measured bounce, like to the downside right there. That pullback right there. That could lead to that. That's why I really want to see this get continuation above. I am cautiously bullish on this one. Looking for targets as high as like 1,000. If we get that overexcitement and enthusiasm to the upside. But it could very easily retrace to the support here before we get continuation higher, or even break down through the support and go lower than what we had right back over here. Does not have to go higher. They never have to do anything. All right. On a log scale, we closed above. On the non-log scale, we did not close above. Which one matters? That's the hard part here. You can flip it to log scale. You can flip it off log scale. You never know which one exactly is the one to use, because people that write these automated algorithms that trade the stocks, well, some of them use log mode, some of them don't use log mode. There's no universal, there's no rule to this. So you have to kind of flip back and forth between them. Which one is this stock obeying more closely? At this point, it's hard. It's a coin toss, right? Like that 618 hit right there, and we're just above it on the log scale. That hit 618 hit right there, and we're just below it on the non-log scale. It's not very clear whether log mode or not log mode works. I tend to default to log mode, but this one's unclear. So we're not definitively set up for a roadmap line higher. In fact, my algorithm uses non-log mode. So when it runs on non-log mode. Just defaults to, that's usually a more conservative. You can see the targets here, 590 on non-log mode. When you flip to log mode, 617. That's more aggressive. More aggressive upside, more aggressive target. Which one's the right one? Like I said, subjective. The empirical data is very difficult, and it's very subjective which stock you're looking at. Now, lately we've been ripping through a few other things here. NKD has broken back down below the box. This is highly likely to get that bigger, deeper retrace. This is an indication of global liquidity, and there's no way that the US market does not go down with it as it pulls back. Dollar getting that 618 retrace right here. This will be interesting. Do we hold and pop? Does that lead to a pop, or do we break down and go on for this extension lower right down in here, hit that target? Don't know which one yet. Apple still being weak. This one has a distinct possibility. We have this little uptrend of lows cooking. We have a distinct possibility of breaking down and making a lower low than we saw right back here in April. Amazon is down to that support at the roadmap line. If we start below this, it can easily lead to a lower low for Amazon also. Google being pretty bullish in the face of a pullback in the market. And like I said, Google seems to be pretty bullish. Now, if we get all the way up to 180, I'm going to chill out selling puts on Google because I do expect a bigger pullback before we can go even higher. Meta, be careful here. This is holding bullish right here, but if we get back below here, it can lead to revisiting the bottom pretty deeply. It's a little bit of a scary pattern here with no pullbacks, one big rip. Now we have kind of set up the odds. We're going on up here to 793. Be very careful. So we've closed above, no matter if it's log or not log. Microsoft is set to go higher. That target's still up there, 490. NVIDIA, it's in the danger zone. This can get a deep retrace, but it also can pop on out, make that new high, new all-time high up here, 164 target. Tesla, grinding in the danger zone, holding up pretty well. I would expect a retrace back to the roadmap line. We have a new paradigm shift coming up in June, July for that. Watch out for breakout. I do big picture, big term, big, longer duration here. I'm expecting some move up into this 700 area. But right now, watch out for some downside. We'll probably get a correction. We've had some corrections on the way up, so we could get a bigger correction back down in the 618 vicinity, right around 260, 270, 280. Now, I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and we go hunting for some opportunities. Snow broke out. It's going for the target. Cha-ching. Oh, baby. I mean, that's doing everything I dreamed of. Only thing, maybe I should have bought more, but still beautiful. Now, it does have this gap down right over here. We might get to the top of that gap down and have a negative reaction that puts us back to here. If we do, that's your opportunity to add some more as we go higher. AAP might be working on a reversal here. This has been pretty beat down. Making a low we haven't seen in a lot of years. Back since the GFC. Potential to turn its fortunes here, but I wouldn't trade this yet. That one pop off the lows does not make a new trend. Be very, very careful. Urban Outfitters. Now look at a rip. Target's all the way up here, 130. MSTR, as I already talked about. Upside downside. ADI. Ooh, I like that. Potential go up to 263. VIGL. Biotech, one of those things that doesn't always follow the patterns. That's a downtrend. Be freaking careful. Coinbase. We're ripping, baby. Somebody said a new all-time high. That's not a new all-time high. Coinbase has got a ways to go. Right up there. 349, 396, 442. Got some work to do. If we can get the bigger bullish pattern, which say we have this bigger pullback, that could lead to 610 to 850 on the upside. KDLY, that's another. This is another one of those Bitcoin buy, like I said, meme stock situations. KDLY should be somewhere on this list. Should be. I don't know where, but should be somewhere on this list. They started buying Bitcoin too, and adding to their balance sheet is I got that right. BJ. Watch for that one to retrace. Right there. It's been some choppy stuff. It's obviously hit a pretty solid top. Watch out for a bigger retrace. CP showing up. There we go. Probably breaking out. Don't really have enough candles to do much with this one. That was probably a 1 hour bounce. 1 hour target, 66.70 on the upside right there. You can see we're struggling at that 618. Right there is the upside. And there's Smeller right there. That one's got the bigger. We're going to have to clear the 618 and go on up to 96 right there. MVTS. Navitas. And it does, one bounce does not make a new trend. That's a downtrend. Be careful. BTCO. There's that 2x leverage on Bitcoin. Now, somebody was asking me, which Bitcoin ETF is the best? Like, you got BitX, which got beat down pretty hard on that last correction. You got BitU right here, and you've got BTCL. And it's like you go look at Bitcoin ETF, you got all sorts of them. You got this one. This one's a play on the futures. This one's another ultra. You got short, ultra short. You got just the straight Bitcoin ETFs. So there's, did you know there's this many? Holy cow. Look at all those. Look at all those. So which one's the best? I don't know. You got to make your pick. Pick your horse. Do your work. Check it out. I think that BitU might outperform BitX. But volatility shares. Now, I've played BitX quite a bit, but BitU is run by ProShares. I've had a little better luck with ProShares ETFs. So, CoreWeave, another one of those, doing the same sort of stuff. Be careful, that one's getting a little crazy. Goog is just Google. There's a 2x long on Mara. There we go, Maral, M-R-A-L. We go 2x leverage on Mara. There we go. I gotta tell somebody. Hold on 1 second. And GBTC. This was original trust, and it's turned into a Bitcoin ETF, making new highs, 90, probably potential upside. It's all the same things. MSTX leveraged MSTR. This one did severe damage to it. This 2x leverage hurt really bad on the downside. So the upside, this one probably going to make a lower high than this high we saw back here in January or December. All right, decliners, ESTL, probably come back to the roadmap line. Humana, probably come back to the roadmap, or probably hunt the bottom here. Wait for this to hold. Come back to the roadmap line from underneath. Lily, probably going to make a lower low. ENPH is making a lower low. Target down here, around 25. Hims with a Z, I'm glad I sold out of that. I was afraid that was going on a bigger retrace. Look at the underlying. Yeah, we can come back to the roadmap line pretty darn easily here. This price action indicated we were going to get a bigger pullback. Run. Ooh, man. Sunrun just keeps running lower. Solar Edge, chopping at the lows. Can we ever recover? I don't know. I have a bunch of solar. Not a bunch, but I have let's see, 20% of the panels I have are Solar Edge. NXT, Shop it in here. NEE. And no clear opportunities here. There's a solar ETF for you, TAN. Obviously, solar company's getting whacked today. Now, if this holds a measured bounce, if we hold in this vicinity, this could lead to a bigger upside potential. Could shoot these babies up in this area right here. That'd be a pretty healthy upside. Almost a double. For solar, getting to retrace, TMDX. In the danger zone, coin flip. Does it go higher? Does it go lower? Charlie Victor Sierra. Under the roadmap line. Watch for that to go deeper. That support is down here at 53. Baba. I'm a little bit bearish on this. This looks to me like it needs a deeper correction. Even though we set up the potential bust out to that 157, I think this might be one of those that fails. Just based on my gut feeling. Anyway, TSM, potential going up to 245. DKS, buying out Foot Locker, doesn't look too bullish. I've had this target since before that news. Look, that's the measured bounce. Rejected. Target right down here. It's not magic, it's just the patterns. All right, bias for the day. Be careful, we're getting that wave 4. Right? I mentioned. And we're already 1, 2, 3. We might top it out right here at the 15-minute and turn down again. Make a lower low, somewhere all the way down to 57.60. Be careful. That's what I'm kind of expecting right there. All right. And have a great day. Watch yourself. Watch your account. The account you save may be your own. Nobody's watching out for your money more than you. So if you don't take a vested interest, well, I'm not going to do it for you. Be careful. We'll see you. Same bat time, same bat channel tomorrow, 9:15. Come see us.